Hey guys, what's going on? It's been a few weeks since I did my last video. I've just been really busy and it's going to be like this for the next few months in my opinion. And I'm going to do some videos here and there, but I don't have the time to do some of these videos or just to research some of the stuff, put it together and all that stuff. But anyways, let's look at this one article at the Economic Policy Journal. It says, while Fed fears deflation, cafeteria, where government price inflation numbers are calculated, is about to raise prices. That's right. An economist at the BLS, where the PPI and CPI compiled, emailed Bob. It said, hey Bob, I hope you're finding this as interesting and funny as I did. While I was getting ready to pay for my breakfast at the cafeteria inside the BLS, I came across the sign that said that prices are going to go up starting May 19th due to a rise in commodity prices, right? The irony of the whole thing is that the display at the building where price inflation data for producer price and consumer price indexes is assembled and reported. Needless to say, your analysis in the EPJ daily alert is correct when it comes to accelerating price inflation likely showing up in the CPI soon. If even a cafeteria sign can tell you that, you wonder why people at the Fed are concerned with deflation when it's the opposite trend that is taking place, especially in food products, right? And we could look at this picture right over here. Maybe let's zoom in right over here. So basically it's telling their consumers, assuming that this picture is coming from that cafeteria. I am assuming that. And all they're saying is that they're going to have to adapt their policies because of higher commodity prices. Okay, so if you want to look at the year-to-date relative performance of some of these commodities, right? You could see the trend is showing that we're going to see much higher prices than we did in the or we're going to see higher prices than we did in 2012, 2013, where you had a correction in some of these markets. And I did show you before that coffee prices did go up. Like at one point, it was up 90% this year. It has slowly but steadily calmed down in the price increase, so it's up 67%. So coffee prices, they were correcting after that huge run up. Corn price is still up. Pork bellies, feeder cattle, orange juice, soybeans, wheat, all up over 10%. Soybean meals close to 10% increase. Sugar's up 9%. Cocoa's up 7.6%. So what does this mean? It just means that higher prices are going to come. And you have to remember, I don't trust the government numbers one bit, the BLS. If you want to look at some other numbers, maybe MIT's Billion Price Index, that's going to show higher inflation. Still not the best index out there because it's only looking at prices, not the content size. But we could look at what that's saying right now, MIT's Billion Price Index. All right, this is MIT's Billion Price Index. And if you look in the red, the online index represents the inflation rate of the Billion Price Index, MIT's index. And then if you want to look at the CPI, that's in blue. So the CPI is saying that we got like 1.2, 1.3% at the end of March, which I don't believe. And if you look at MIT's Billion Price Index, it's close to 2%, so a little more than 2%. So that's a little better. Reading once again, not showing the content size increase. So that's where my problem is, and then there could be some other issues as well. But we could talk about that another time, and I have talked about why I don't like some of these indexes as well. So if you look at that, you see 2% inflation, right? You see GDP contracting. You see GDP contracting using the bogus numbers from the CPI. So if they use the red numbers from the Billion Price Index, we'd have negative GDP. So what does this overall mean for the stock market, in my opinion? Once again, I'm going to show you this graph that I made regarding the stock market. I think it's updated to February 2014 with margin debt. So you see margin debt, once again, all-time high. See inflation numbers starting to pick up, right, in some of these online indices again. Oil prices 102.64, higher prices for Obamacare, right? Put this all together. It's not only happening at the cafeteria at the BLS. What does that mean? Once again, my thesis is next 2 years, stocks are going to roll over. Consumers are going to have less purchasing power, and as a result, we're going to see a lower market. Now, does that mean we've got to the top? No, like I've said before, but you've seen the yen carry trade unwinding, which I've mentioned many times, and because of that, or it's slightly unwinding, and you've seen some of these high flyer, these stocks with high betas or high beta stocks, they're unraveling. And my next take is that you're going to see some of these safer stocks in the Dow. They're going to start to roll over. So once again, you're seeing higher prices at the BLS, if that email is correct, and you see that, well, get ready for higher prices before the next big market correction. The next big market correction, once again, I think is 2016, 2017, 2018, around that time frame. Then hopefully we could start to get much better economic growth, even though I'm going to say the same things that, hey, it's phony and baloney what the government numbers are saying, but hopefully we could have a better economic environment and more people could get jobs rather than having to sit at home and collecting a welfare check. Anyways, thanks for listening to me, guys. I'll talk to you probably in a few weeks or a week. I don't know. Memorial Day weekend's coming next week. So talk to you then. Bye.